Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, let's take a look at the gold market. Today guys, we mostly will take a look at the tactical patterns that have been formed on Friday rather than to take a look at some long swings and a really big picture. In general, currently it's a bit some signs on the gold market is worrying me, and the major riddle that I see right now is, despite all the positive moments, positive facts for the US dollar, I mean the good fundamental data that we have got in recent months, the nice earnings reports from the companies. In general, the investors tell that in general the earnings reports on the second quarter were positive. The increasing of the probability of rising rates sooner or later from the Fed Reserve. We see that gold troubles the downward action, so it's really difficult for gold to continue move lower. And when we've got on the markets in other moments such gathering such combination of the positive factors for United States dollars or bullish factors. In previous moments we could see the really drastic plunge on the gold market. And don't forget that Fed still is contracting the quantitative easing program from the 10 billions every meeting. So that is really also a significant impact on inflation. But take a look at that. As gold has bounced down from the 1340 area, the downward action becomes slower and slower and slower. But the factors that is bearish for gold in general are growing and becomes more significant. And I think that here there is some reasons for that. And I think that geopolitical tensions is not the final and total answer on this riddle. There's something else exists here on the gold market that prevents gold from downward continuation, and that really looks suspicious. But until we will get the clarification on the high time frame charts, on the monthly chart, on the weekly time frame chart, we probably will better deal with some clear pattern that we have right now, and the trading on the coming week will be mostly tactical rather than strategical. And in fact, it will be will pass on the sign of weekly pattern. Weekly pattern that we have is the bullish grabber. So I will show you the weekly chart. Here is the pattern that we have. This is the bullish stop grabber, and this pattern suggests the taking out of this stop. The invalidation point of this pattern is low. But guys, if market will move above this top, this could really significantly shift the overall situation from bearish. Right now situation is still bearish. It's not very strong, so it stands on the edge, but still it's bearish. When the market will take out of this top and continue move higher, they will not be bearish anymore. Even more, if market will exceed this top, could get the butterfly sell. That will suggest the taking out of this top, and that in turn could shift the long-term picture as well. That's why this pattern right now is very significant, and in general I think that gold market right now stands at very important moment. So that's why coming week will be dedicated mostly to this pattern. Now let's speak about the possible risks. So we currently understand what is the grabber is, what the target could be, where is the invalidation point, but what risks we have with this pattern. The major risk that I see stands on the daily chart, and it stands in relation to this ABCD pattern. Despite what pattern you will take, either this one, A, B, C tab, or that one, A, B, C tab. Even if you will take a look at the small trace in A, B, C, D, A, B, C tab, D pattern, you will see that all 100% targets, the completion points of these A, B, C, Ds, stand below these lows. And that is invalidation point of the grabber. That's the major risk. So I feel uncomfortable when I have uncompleted ABCD pattern and market shows some reversal. It very often leads to returning right back down, taking the target completes the pattern, and only after that market reestablish move up. But if this will happen, market will erase the bullish grabber that have been formed on weekly chart. So maybe market will form another one here. So if it will, for example, take out this lows, complete pattern, turn right back up, maybe market will form another stock grabber. That's also possible. But speaking in relation to this pattern, that's the risk. On the 4-hour time frame chart, we also have some hint on the possible bullish action, because we have bullish divergence accompanied by the falling wedge pattern right at the support. If you take a look at the daily chart, you'll see the market stands at support. 5.812.80 support. Here, a 618 fib support from that low to this high. The 618 retracement, one of the major levels, major supports. And market is forming the falling wedge right here. So you could draw it in this manner. You also probably could try to take this top to draw it. That's also possible. But anyway, this is potentially bullish pattern. And if market will continue to move higher, the area around 1310 will be a very significant moment. Because take a look, that this really a natural support resistance line. So here it was support, market has tested many times, breakout, retesting, move down, breakout, support, again support, resistance, resistance. This will be the resistance, and if market will return right back up, it will return inside of this former consolidation, and that will probably open the road right to this top. It's really will be a significant moment. The market will pass through it. The breakout of the wedge by itself, it will be significant, but moving above the 1310 area could be really the moment that will give us more confidence that probably market is ready to move to show high action. So what I would like to say is that if you still would like to trade this pattern, and I don't see any problems with it because pattern stands in place, we have some signs that really it could work. All that I would like to say is that trying to take the position as close to its invalidation point as possible, because we can't totally exclude the appearance of this EBCD pattern it's completing. Despite that CD leg is flatter than AB, market still has the chance to reach this area and by itself taken out of these lows. That's the risk. That's why to minimize the risk, it's better to take position as close to this bottom as possible. Now on the chart we see it's rest and thrust. It's also washing rings, guys, by the way. Small washing rings was to these lows. The rest and thrust up is the swing that probably you could try to use if you would like to take the position in favor of this grabber on the weekly chart. If market will show retracement right to the 1268 area, so 618 support, that will be probably one of the levels that could be suitable for taking the long position. Here you will got approximately the $6 per contract, the risk. So it's not very small, but still it's not the big either. So it's in general this suitable and acceptable risk, especially for the weekly pattern, and when you have the potential target at an area somewhere around the weekly chart above the 1350. So risk reward is acceptable in this case. This is the really some negative moment of the weekly patterns, that although they promise significant profit, but they also demand the significant risk, because this is the weekly scale. It's really the big scale. So that's, guys, what I see right now on the weekly chart on the gold market in general, and currently the situation still stands sophisticated on the gold market, and probably we do not have the real clarity on the gold market yet, and the sentiment of the investors still really blur. If you'll take a look at the recent CFTC data, you'll see that the open interest has dropped significantly. but the net position has decreased not really much, and it means that that investors close position as longs as shorts, the both side. So just exit from the gold market, and that absolutely does not add stability and clarity to the gold market when investors just leave the market. Market becomes thinner, and in this case, although this is of course, we do not speak about the really drastic changes on the gold market, really not just crucial falling of the open interest, but still this is the sign that investors also do not totally understand what is going on right now in the gold market. So we do either. And that's why the dealing with the tactical patterns, clear patterns that we have in the gold market is just safer than trying to catch the strategic direction right now. So let's see what will happen next, but sooner or later this riddle will be resolved and we'll understand what's the problem is on the gold market right now.